No need to clocking cause I'm working overtime. Working overtime, working overtime.
How's it going, all you trader rights? This is the trading night with Trading Conviction coming at you with another 5-minute update. So let's get on into it. In today's news, what we got is there's near-term headwinds coming from Germany and France because of the protests, with Germany getting hit with the railroad strikes, right, which is possibly going to hit oil. Oil right now is trading above 70, so we'll see how things go. Government brokered a deal with SVB and First Citizens Bank, and First Citizens Bank is going to buy SVB at a 16.5 billion discount. Moving on, we got Bitcoin. There's a Bitcoin drop because U.S. regulators, most notably the U.S. Commodity Futures Trading Commission, the CFTC, is looking to hit Binance with a lawsuit alleging that it willfully evaded U.S. laws. Some of the complaints consist of instructing customers to bypass compliance controls, insider trading, and illegal derivatives exchange. So we'll see what happens. Back in 2018, the U.S. Department of Justice to start investigating Binance on some of the possible alleged illegal stuff they were doing. Coinbase is also recently getting hit with the SEC taking some regulatory action. So that's pending right now. And then we got possible reparations of overseas profits by Japanese corporations by the end of the fiscal year. And this is possibly why the yen is getting stronger. So moving on to the charts, we got the euro. So in the euro, GBP, JPY, NZD, GBP CAD, GCHF, and EHUF, I have some positions on, so we'll get through it. The euro, I have a 75k position on a short because I wanted to hedge the GBP, NZD, and GCAD. And my conviction level is around 55%, so it's not as high. So I reduced my position sizing in order to be able to stay in and actually place these trades, because the main trades I did place was JPY, the GCHF, and the EHUF, because there's no specific price I wanted to get into. But since I got into those, it did spur me to get into these other positions. So again, euro 7.5k, we got the GBP. I think price is possibly going to push higher, so I got in with the 2k position on here. And then these right here that you see, like on the euro, the 0.97%, these are the rollovers. So I get a positive rollover here. JPY, it's 1.81% negative rollover. We got the JPY, got a 10k position. Looks like it's going up a little bit. I think price is going to push lower, and it's negative 6.26%. So some of these pairs I get in that have positive rollovers helps to absorb those negative rollovers. NZD, I got negative 1.57% negative rollover. Got 2.5k position on there. Right, I think price is going to push up higher. The GCAD, I think price is going to push down lower. I got a 1k position, very small, negative 1.1% rollover. GCHF, 1.98% positive rollover. I got a 10k position. Right, I think price is going to push up higher because it's GBP. Of course, I'm still thinking that the economy is probably going to tank, and the BOE still needs to do something about interest rates. And the EHUF, like 9.46% interest, positive rollover. I think price is going to drop. So we'll see if that keeps happening. Moving on over to my other charts. Got the dollar pushing towards 102.50. Let's see if it keeps breaking down. The banking contagion is over, and then we'll look at the Fed rate monitoring tool. What it looks like is it changed a little bit, and there possibly could be a rate hike. So we'll see what that. Silver pushing down lower, might break below the 23. Gold is pulling down lower. Also, 1976 might hit 1950. We'll see. Dow Jones futures increases because the banking contagion is kind of getting remediated or calming down. It's interesting how this is still up though. Alright, then we got oil, which oil pushed up higher above 70 with the possible strikes in Germany and in France, potentially pushing oil up higher. And the demand in China increasing from them recovering from the COVID pandemic over there. Moving on to the economic calendar, we got yesterday, retail sales in Australia went up. And the upcoming news, we got nothing really, just talks from the central banks. Consumer confidence 101 went down a little bit. So moving on from there, I wanted to show you the Fed rate monitoring tool. So now, like, remember how it was 83.2% that there's possibly not going to be a rate hike, but I'm guessing with the banking contagion calming down, there's a greater chance for a rate hike of 25 basis points to happen. So we'll see if this changes. But that's all I got for now. Until next time, it's only fiction without conviction. Y'all stay safe out there. Have a good one, and talk to y'all later. Peace.